Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. All eyes are now on tomorrow's US CPI release for August. But first, there was surprising news from the US. August producer prices rose far less than any analyst had forecast. In fact, they fell 0.1% in August from July, following a downward revised 0.7% gain in July, driven by a sharp decline in margins for machinery and vehicle wholesaling, as importers absorb some of the tariff taxes. On an annual basis, headline producer inflation slowed to 2.6%, while core producer inflation eased to 2.8%. Analysts had expected the year-on-year change to be up 3.5%. Markets took these changes at face value, ignoring the new management at the agency compiling the data. It is being seen as Fed-friendly for a rate cut next week, although to be fair, far more will depend on tomorrow's CPI release, where rates are closer to 3% are anticipated. Also unusually positive was last week's data on US mortgage applications. They jumped 9.2% from the prior week to be 11.6% higher than year-ago levels. Driving the turnaround was a 15 basis points plunge in benchmark mortgage rates, which have fell to their lowest in nearly a year as a wave of pessimistic labour market data drove yields on long-dated Treasury securities into retreat. Applications for a loan to refinance a current mortgage, which are more sensitive to changes in interest rates, surged by 12.2% from the previous week to their highest level in a year. In turn, applications for a mortgage to purchase a new home rose by 6.6%. And there was another US Treasury 10-year bond auction early today, and that resulted in a median yield of 3.99%, down from 4.20% at the prior equivalent event a month ago. But a feature of this latest event was the declining demand, down 8.5%, which is a notable pullback. Across the Pacific, Japanese manufacturers are feeling bullish, especially about export prospects. The Reuters Tankan Index rose to a very positive level in September, its highest level since April 2022. Easing trade uncertainties following the Japanese-US tariff deal that sharply eased the tariff rate is behind the shift. Sentiment improved across 6 of the 9 manufacturing industries surveyed there. And in China, they reported that consumer prices dropped 0.4% in August from a year ago, after being unchanged in the prior month and missing market expectations of a 0.2% decline. It was the 5th episode of consumer deflation this year, and the sharpest drop since February. China had a similar period of deflation in the second half of 2023, but escaped those pressures in 2024. But they're back again. Food prices fell 1.2%, but beef prices were down 4.3% and lamb prices down 3.6% on that annual basis. Milk prices fell 1.4%. Meanwhile, Chinese producer prices dropped 2.9% in the year to August, less than the 3.6% drop in July, which was the steepest decline since July 2023. Producer prices have now deflated for 35 consecutive months, although the latest data is the smallest decline since April. And despite growing civil unrest and street demonstrations in Jakarta, Indonesian consumer sentiment was little changed in August, although it is maintaining its recent low that started in May. However, in a longer-term perspective, it is 20% higher than it was a decade ago. The last thing Canberra wants to see is an unstable Indonesia as a neighbour. And Fitch Ratings has raised its world growth forecast for 2025 moderately since the June Global Economic Outlook on a better-than-expected incoming data for the second quarter. But there is now evidence of an underlying US slowdown in hard economic data, and positive surprises on Eurozone growth have partly reflected Euro's tariff front-running, they say. Fitch still expects world GDP to slow significantly this year. Global growth is now forecast to be 2.4% in 2025, a sizable slowdown from 2.9% last year and below trend. China's forecast has been raised to 4.7% from 4.2%, the Eurozone's to 1.1% from 0.8%, and the US is to 1.6% from 1.5%. World growth for 2026 is 0.1 percentage point higher at 2.3%. The US Treasury 10-year yield is now just over 4.03% and down 4 basis points from yesterday at this time. And the price of gold started today at a new high of $3,645 an ounce, up $4 from yesterday. And American oil prices are up $1 at just over $63.50 a barrel, while the international Brent price is similarly high at just on $67.50 a barrel. American crude oil stocks jumped, and for a second week in a row, when declines were anticipated, indicating weaker demand than expected. And the Kiwi dollar is now just over 59.5 US cents, up 20 basis points from yesterday. Against the Aussie, we're down 20 basis points at 89.8 Australian cents. Against the euro, up 20 basis points at 50.8 euro cents. That all means our trade weighted index starts today at just over 66.8 and down 20 basis points from yesterday. And the Bitcoin price starts today at $113,721 and up 2.4% from yesterday. Volatility of the past 24 hours has been moderate, at just on plus or minus 0.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.